Cash flow management can make or break your business. No cash is equal to no business. Cash flow mismanagement may lead to business disruption and loss of business reputation. Employees, suppliers would like to work with those organizations that generate consistent cash flow so that their payments are received on time. Cash flow mismanagement may lead to business disruption and loss of business reputation. Employees, suppliers would like to work with those organizations that generate consistent cash flow so that their payments are received on time. The bottom line of the business may be in profit. If the amount is not realized from the debtors within a specified time, it would be difficult to pay your suppliers or employees on time. Recently, an airline company was in the news for non-payment of salary to employees on time and not depositing the due provident fund to the government. Infosys, TCS, Apple, Google are some of the examples of cash-rich companies. In this video, I am going to share 6 tips to improve and maintain cash inflow in your business. So let's get started. Tip 1. Have a credit policy in place. Many SME organizations do not have a proper credit policy in place. The payment terms with their customers are on a random basis depending on the negotiation skill of the customer. Lack of uniformity or clarity on the credit terms will be harmful to the organization in the long term. Let us understand the same with an example. Let's say Ram Limited has made a sale of rupees 1 lakh to Sham Limited without specifying any payment terms. In this scenario, Sham Limited will make payment to Ram Limited only when it has sufficient cash flow in the business. If the Sham Limited has a cash flow challenge, then Ram Limited will be the last supplier to receive the payment as the credit terms with this company is not specified. Hence, it is advisable to have a credit terms specified in the face of invoice or through a separate agreement to make buyer aware of the date by which he has to make the payment and the consequences of not making payment on time. A standard credit policy contains the credit period, advance to be paid, interest to be charged in case of delayed payment, etc. Having a standard credit policy will also help the alignment of sale function with that of accounts. Tip 2. Sale of high margin product. Every organization generally have easy to buy, primary and high value product. The easy to buy product has low effort and low return. The primary product has high effort and high return. Whereas the high value product has low effort and high return. The cash inflow generated through the sale of high value product is high because of better margin. Hence, the sale team of the organization should focus more on selling high value product compared to the primary and easy to buy product. Tip 3. Inventory management. The maximum amount of cash generated by the business is spent on buying and maintaining the inventory. For example, a company might have 100 stock items for sale and will have to maintain sufficient stock to make sale. If these stock items are purchased without analyzing as to which stock will move fast and which will move slow, then there is a more likelihood of getting cash stuck in the non-moving inventory. The best way to manage inventory is to order inventory based on the sales made during the same period in the last year, and also on the forecasted demand of the product in the current year based on the trends in the industry. Any inventory which is likely to turn outdated or worn is required to be sold immediately. Many shopping malls have strategy to sell the garments at 50% discount to move the non-moving stocks and pave the way for the new stock. Tip 4. Make more sale in cash. It may sound simple, but simplest way to generate more cash flow is to make more sale in cash for profit. More cash sales means more cash into the business. The question arises, how do we increase sale in cash? The sale can be increased by improved marketing and sales activity of the firm. The question arises, how do we increase sale in cash? The sale can be increased by improved marketing and sales activity of the firm. A startup in the health diagnostic space has made a sale of rupees 300 crores within a period of 3 years of its operation only due to improved marketing and sales activity. Tip 5. Lease the set instead of buying. Many business owners get tempted to buy a fixed assets like building, plant and machinery rather than leasing it, in spite of having insufficient cash to buy it, as buying an asset looks trendy and grabs lot of attention. However, this decision can put a lot of stress on the working capital of your business. The company once bought a fixed asset may not have cash to buy a goods or pay amount to suppliers or even to their employees. The SME business owners can start their business from a rented space and later on look to buy a building if there is surplus cash to buy the asset. One of the client of mine has made a huge mistake of buying a building in spite of not having sufficient cash flow to run the business. As a result, his business reputation took a massive hit. Hence, buy any fixed assets which requires sufficient cash outflow only if you have sufficient cash on hand. Tip 6. Focus on creating immediate cash for deferred service or supply of goods. Many internet and telephone companies like Act, Jio, Airtel are using this model to generate cash flow for their business. In this model, the customer pays in advance for the service, also known as prepaid service, and later on receive the service over a period of time, let's say 6 months to 1 year. The businesses dealing in goods also may ask their customer to give an advance of 50% to 100% of cash before the dispatch of goods. This will help the business to use the cash received to buy or produce the goods. Do check if this kind of payment terms works for your kind of business. So hope these 6 tips helps your business to improve and maintain cash flow. For more informative videos like this, do subscribe to my channel. This is CA Jithendar Patel signing out. See you in my next video.